Today we see a strong bearish reaction putting in check the uptrend seen in the indices and many other stocks. What's more, this could ruin any recovery attempt in stocks that are already down, like Apple and Tesla. So let's see what's going on over here. Welcome to the Finance Hydra channel. My name is Nathan, founder of the 5% Project, whose purpose is to help you become a consistently profitable trader, able to beat the market and avoid unnecessary losses as a result of a lack of strategy. Because, as far as I'm aware, most of the 95% of traders who can't make money, they can't make money because they don't have a clear and good strategy. We can help you with that. Just take a look at the QR code right here on the left corner of your screen and in the fixed comment below. Now, SPY. As we can see here, it is a massive bearish candlestick pattern. We are losing the previous day's low over here, making what seems to be a bearish engulfing candlestick pattern, losing the 21 EMA, the exponential moving average at the same time. So yes, it is a quite bearish reaction. What's more, to make things worse over here, this reaction is occurring just after we retested the all-time high area again today, around $524, 524 area, this blue line over here. This is the all-time high area. We reached this key point over here, and right now we are dropping again, meaning this could be a triple top chart pattern, right? And this is a quite problematic bearish reaction, suggesting that yes, SPY could correct a little bit more sharply than expected. In this scenario, QQQ would also correct. QQQ is also making a bearish engulfing over here, losing its own 21 EMA. We couldn't retest the all-time high area again, but well, we are clearly weaker than SPY, and if QQQ loses the $434 area over here, in my humble opinion, we are gonna materialize a possible double top chart pattern, and this could bring a sharper correction on QQQ, and our dear tech stocks over here would suffer a lot in this scenario. We could see a sharper correction on larger time frames like the weekly chart over here, back to the 21 EMA on the weekly chart. How this is gonna affect our stocks? Well, in this scenario, we have two stocks among the Magnificent Seven that are already bearish, namely Apple and Tesla. Apple is trading around its support level at 167. Yesterday we did a good bullish reaction, but today we are trying to frustrate this bullish attempt, and we could easily retest the 167 again. But if we lose the 167, guys, the next technical support level in Apple is 157. $10 below this support level, and this is a lot considering we are talking about Apple, which is a low beta stock. It is a 6% drop over here. That would be quite problematic. Of course, Apple is already bearish, so that would be a surprise, but it would be quite annoying to see a bullish reaction getting frustrated over here, because to me it feels like it is a waste, all right? Because, well, when we are around support levels, the risk-reward ratio is more attractive to long trades. But if we don't see any bottom signal getting materialized over here, well, Apple will just continue to drop, period. Tesla is right now very close to the support level of this descending channel. We are trying to react, but again, we don't see any meaningful, amazing, good confirmation over here. In this scenario, if QQQ, if SPY, if they start to correct a little bit more sharply, Tesla could lose the support level of this descending channel. And as I told you guys, in this scenario, the $152 is going to be our next technical target. Of course, not always lost over here. Yes, we are making a quite ugly reaction right after it failed to break the $175 area. What's more, it also failed to break the 21 EMA on the daily chart. But well, we gotta lose the $164 first in order to materialize a real bearish reaction. Because to me, by losing the 164, you know what Tesla could do? could trigger a head and shoulders chart pattern, right? This would just reinforce the bearish thesis back to the 152. Now, before I forget, I have been hearing some people complaining about my charts, right? Nathan, your chart is not pretty. I mean, this background over here is white, it is gray, your candlesticks are black and white. It is not a pretty chart. Guys, first, I'm not here to please anyone, all right? Second, the function of this chart is not to be pretty because let me show you guys. Here, this chart, for instance, I think you guys want to see a black chart with green and red candlesticks, right? I think this is prettier, all right? Well, but guys, I only use these charts over here to share images on my Instagram and here on our YouTube tab community over here. Here, as we can see, this layout has a name, Instagram. It is only for pictures. It's only to grab your attention, but I don't use that kind of template because I'm a real professional trader. I'm here looking at these charts every single day, every single hour, the entire day. I can't afford to look at this chart with vibrant colors, black background the entire day. It is too harmful to my eyesight. This causes eye strain. If try to read a long article on a website with a black background and white letters, you'll see what this is gonna do to your eyes. It is annoying. It causes eye strain. So this is quite funny, right? Because this is one of those almost insignificant details that says a lot about you. Hardly anyone ever pays attention to this. If you are used to these dynamic young financial gurus, well, in that case, you can just go back to the hole you came from, because I assure you I maintain a high quality audience on this channel, all right? So I'm not gonna change my layout just to be prettier, okay? I can't afford that. I'm looking at these charts all day, every single day. There is literally a scientific reason why I use this template over here, all right? So yeah, I'm not gonna change it. Now, back to our analysis over here. The Magnificent Seven, well, they're all trying to collapse over here. Microsoft, very strong bearish reaction. However, it is not technically bearish yet. Nvidia is losing the 21 EMA. However, the key point that is going to turn Nvidia bearish is $841 down here. Only by losing this red line, I see Nvidia triggering a sharper correction, possibly on the weekly chart over here. Amazon is also trying to correct, but it is still very bullish. There is no way that Amazon is going to turn bearish as long as we stay above the 21 EMA. Google is losing the 152 support area, trying to correct to the 21 EMA. Meta is also making a bearish reaction. This is called gravestone doji. Maybe could be a shooting star candlestick pattern, but to me it feels like it is more like a gravestone doji right under the previous resistance level over here, suggesting some pullback. But as we can see here, the indices and these stocks are not necessarily bearish yet. What we could see is a sharper correction, but they are still above their main support levels. To be more specific over here, QQQ is still above the 434. If QQQ loses 434, then okay, I believe the rest of our tech stocks over here are going to correct a little bit more sharply. So we gotta pay extra attention to this support level tomorrow in the next few days, because by losing this key point, we're gonna see a real bearish reaction. And of course, I'm gonna be here every single day keeping you guys updated on this crazy weird market. So consider subscribing this channel, and of course click the like button to support me as well. Join the 5% project for more trading ideas, trading strategies. Thank you very much for your audience, my dear friends. See you guys tomorrow. Stay safe. Bye bye.